From the 22 News Plus studio, this is 22 News in Focus with Patrick Berry.
Hello, everyone, and welcome to this edition of In Focus. I'm your host, Patrick Berry. If you're in the market for buying a home, a condo, a mobile home, a prefab house, a business, a multi-unit dwelling, whatever it is, you need a mortgage. So joining me today across the desk is Heidi Leonard. She is a loan officer with North Point Mortgage. Heidi, thank you so very much for joining me. You are the pro in this conversation, so I'm looking forward to picking your brain. It has been 23 years since I bought a house, so I've been in my house for a long time. It's a lot different today than it was back in the year 2003 when I bought my home, and not just because of the price, but there are so many different ways to buy a home now, or a condo, or whatever it might be. I guess you've been in this business a while. What are some of the biggest changes you've seen in, say, 20 years?
Well, one of them is a lot of clients saying the thought that I have to come up with 20% to purchase has kind of put to the wayside now. What I mean by that is there's so many different options out there. You have down payment assistant programs available. You can put 5% down on multifamilies. There's a variety of things that you can do with a lower down payment and make it affordable still monthly.
So hold on a second. You don't have to put 20% down. I know when I bought my home, I was close, but I had to get PMI.
Yes.
Something mortgage insurance.
Private mortgage.
Private mortgage. I couldn't remember what the piece of. So, and it was like, I need a little bit, but I stressed over that 20%. You don't need that anymore.
No. And another great thing, just talking about PMI, is let's say you even put 5% down, we can shop that PMI rate to get to the lower premiums. The premiums are not like they used to be. So that's a nice bonus as well, too.
So is that all in relation to the rising cost of homes, that all these different options, or not really?
Possibly competition, right? There are different programs out there. It can be a couple of variables, but I just think that 20% is it's attainable, but it's harder for a family to save that much.
Well, it's funny. I mean, I'm ballparking. I don't know, because it's been so many years since I've been out of the market, but just what I see, I'm going to say the average home in Western Mass is probably about $400,000. That's $80,000 as a down payment. That's a lot of money. And unless you're going from one home to another and you make a lot of money, it's almost impossible to come up with $80,000.
Yeah, it can be difficult for sure.
So I like the fact that, okay, so maybe I put 5% down, but then you negotiate that PMI. That was never the case in the past.
Yeah, it's nice.
Very nice, very nice. So is that something you as my mortgage contact, is that something you do? You negotiate the PMI, or is that something I do? How does that work?
So we will do it. So what it looks at is the purchase price, the loan amount. It looks at the credit score. That's part of it. It looks at your income versus your debt and housing ratio. So they put that into play. And we run it through, and then it's an automated system, and we run it through the different PMI companies, and we come up with the rates, and we take the lower of, say, 6 that are out. We'll take that lower rate.
So it's really no different than shopping for your regular mortgage.
Correct.
So because you plug in all those same factors, and the data that comes out, then you take that to the banks, and then see which one will give you best rate. Where do we stand in 2026 with your average 30-year mortgage rate?
So they're saying, and we'll hope that this is true, that they're going to hold steady for the next year or two around that 6, well, maybe even lower to the 5s at the end of this year, or the high 5s, until maybe 6.25. Of course, we don't know that. We don't have a crystal ball here, but
it's a moving number. But that 6% is good.
Yeah, that's going to help our market, right? It's going to keep it stable, so that's good.
It's funny. I know some folks here at 22 News have family members looking to kids looking to buy their first home, and the older folks took advantage of refinancing. I forget how long ago it was. I think my interest rate is like 2.25. It's ridiculously low, but that was an anomaly. That I hate to say it, I hope that never happens again, because we were in a real global financial crisis, but I was able to do that. So what's the normal, like what's average for an interest rate?
Depends, like we said, credit score, all those. So probably between the 6 and 6.5, most clients are running into, depending on their situation.
So 6 and 6.5 is, when I bought my first home in 2000, I think I was at 9.5,
Mm-hmm.
and then my Westfield home, I want to say was at 8, and I've refinanced a couple of times, and now, like I said, I'm down to 2 something,
Mm-hmm.
2.25, some 2.25, whatever it might be, same thing. But so when it comes to accessing the various types of ways to get a mortgage, should the potential homeowner do a lot of research on their own or work with you because you're already light years ahead of the research that person can do?
I mean, it's always good to research, but with that being said, every person's situation is unique and different. So I will know what product to put them in. I like to educate. Education for me is important for them to understand where their payments are going to be, why I'm putting them in that product, and also giving options because I want them to have a choice too. If they have those choices, they can pick which works best for their family.
And some of those things are how long you're going to stay in the home too.
Right.
It could be, you might not, a 30-year mortgage might not work for you if you're only going to be there a year and a half. You might want something different, which could save you money.
Correct. Yes.
Right. So, and when we come back, we're coming up on our first break, but when we come back, we will get into some of those specific mortgage options.
Okay.
They're way more now than there were 20 some odd years ago when I bought a house.
Yes.
All right. As I mentioned, we're coming up on our first commercial break. Stay with us. We're back with more in just a moment.
This is 22 News in Focus with Patrick Berry. This is 22 News in Focus with Patrick Berry.
Welcome back, everyone, to this edition of InFocus. I'm your host, Patrick Berry. Sitting across from me is Heidi Leonard. She is a loan officer with North Point Mortgage. Heidi, thank you so much for joining me. When we went to break, we started to kind of tease everybody about the many different loan options. I go back in time and I'm thinking about there was a conventional loan with a specific term. I mean, term meaning years, adjustable rate. Maybe that was about it. That's just trying to come to memory. What else is out there that people can take advantage of?
Oh, we have so many different products. So you have your standard conventional with a fixed rate, or you can do an adjustable rate. We have our government programs, which are based off of HUD, which would be FHA,
Okay.
VA for our veterans, and USDA for rural housing, which many areas in Massachusetts qualify for rural housing.
So if I'm looking at buying a home in Western Mass, which is rural housing outside of, maybe some of the bigger metros, Springfield, Chicopee, Holyoke, so forth, I can get a USDA loan?
0% down. It's 100% finance.
Really? How many of your clients are taking advantage of that?
They're starting to more and more now, depending on the area, if they're looking in that town that qualifies for it,
Okay.
which quite a few do. So
is that is a 0% down? Is that a good thing? I'm just thinking, you're just moving the money into your mortgage,
yeah, well, if you're doing it with a good rate and, it's better than renting, right? So you're at least building equity into the property and it allows you to get into there.
It's funny you talk about better than renting. I look at the rents and they're way more than what a mortgage can be.
Correct.
So it's sort of, this kind of circles back to our conversation a little bit ago about being able to come up with 20% down. If you're paying $24,000, $25,000, $3,000 a month in rent, trying to save money is nearly impossible. So some of these FHA or USDA loans really are beneficial for home buyers.
Yes, absolutely.
What about first-time home buyers?
Oh, great question. One of the things I'm passionate about is first-time home buyers. We have so many different mortgage products that are available. We're also a mass housing lender, so they are offering some down payment assistance programs that are pretty outstanding, up to $30,000 for those that qualify. And what a lot of people don't realize, if you're looking at your cities and towns, they offer down payment assistance. Some of them do. So it's really beneficial to look into that to see if you qualify. They're usually based off of income and credit, but it is usually an income limit on some of those programs.
So some towns are offering financial help to Why? Why would a town do that?
Well, to helping their community. I believe Springfield goes up to 35,000 for those that qualify for down payment
And
assistance.
certain income levels, right?
Correct, yes.
And do you have to, and just because you mentioned we're in Springfield, do you have to buy like a certain type of home or in a certain neighborhood or from a certain seller? I'm just trying to
So
think.
some of the
What kind
programs require, I'm not sure specifically for Springfield, but other towns and cities, some of them do have specific areas that you have to purchase in. They're looking at the low to moderate census tracking for income, and to bring home ownership into those areas.
Are there also requirements to make improvements to a property too? Like, so you may get a home that needs work,
Mhm.
but you're getting what's called $35,000 in down payment assistance. Is there an expectation that you will improve that property, or not an expectation, but there is a clause or something that you guarantee that you'll make improvements to the property so you get that loan? Like, kind of like I'm thinking of
Yeah.
college loans. Okay,
Mhm.
I'm gonna go to work for this employer,
Mhm.
but you got to work here for 5 years, and we'll wipe out your college debt. Is there
Okay,
something
yes,
similar
some of
like
them
that?
do have that. So you'll have to look at what that, if they have to pay that back or not. Each program is going to have different requirements. There's so many different ones, but you want to read what those guidelines are.
But and that's where you help
Mhm.
because you're in it every
Yes.
day, all day long.
Mhm.
You understand the different town parameters
Mhm.
and some of the towns that offer.
And if I don't know, I'm calling them. So,
Who would you call it? A city clerk? Town.
yeah, usually the city. I'm not sure if someone at the city. Usually there's a number on the down payment assistance. You just Google it and you'll find, put Springfield down payment assistance and city of Springfield. It will pop right up.
Really?
Mhm.
Has the average age of a first time home buyer has it increased?
Yes.
And
In the 25 years I've done that, I do feel that there's a variety. Yes, but also with these down payment assistance, it's making it attainable for those that didn't think they could buy.
that's a great idea
Mhm.
because again, having any assistance, uh, God, it's almost like free money, quite frankly.
Sometimes.
But there's caveats, I'm
Yes,
sure.
yes,
I'm
yes.
sure there's caveats.
Yeah.
When you look at a traditional mortgage, I
Mhm.
mean, again, I'm going back decades when I
Sure.
bought a home. It was you had I think it was a 10, a 15, and a 30-year
Mhm.
mortgage. Is that the same? Is that still the same?
Yeah, still the same. Mhm.
Okay. But I heard rumblings of a 50-year mortgage.
They're not out yet. I've been hearing about it, but they're not released yet, but there is some talk about that.
And what are your thoughts?
Will it make the payment more affordable? Yes. Uh, the interest that you pay to the bank
The
lender
lender.
over the years will
Yeah.
be substantial. So I guess it'll get a consumer into a home, but there'll be a cost to that.
And that's something you
Mhm.
would sit with the prospective buyer and say,
Yes.
okay, look, this is the deal. But then again, like me, you can always refinance down the road, right?
Correct.
And what was it? A point and a half, 2 points lower. It was sort of the kind of
Mhm.
the yardstick for measuring.
Mhm.
If you're going to refinance, you want to get X.
Right.
And what it
That's kind of changed over the years as prices have gone up, right?
okay.
And loan amounts have gone up. So, even a 0.5% for depending on the loan size will be beneficial.
Okay. But again, you really got to pay attention to it.
Mhm. We run the numbers. We gotta make sure it makes
Right.
sense. We're not gonna put someone in something that's not going to make sense, so.
It's funny. I'm glad you say that
Mhm.
because the 2008 home crisis, that's exactly what happened is
Mhm.
there were too many lenders. And this I still think is again, I'm an outsider looking in. You can tell me.
Mhm.
I think I got approved for like a $500,000 home 20 something years ago. There
Mhm.
was no way
Mhm.
I could afford that.
Mhm.
Is it a much more realistic? Here's what you can afford nowadays than it used to be
I think this
because
it's a
of the '08 crisis.
well, you have parameters that are set. Each program has a certain threshold that's allowed. So you can go to the highest threshold, not necessarily do you want to. I always ask my customer, have you done your budget? Have you run your payments? Because you want to make sure you're comfortable with that payment too. But the thresholds have actually pretty much stayed the same.
Oh,
Yeah. Now program guidelines are a little bit different, but thresholds for ratio is about the same.
very good. We are up
Mhm.
on our second commercial break. Still plenty more to talk about when it comes to buying a house. We're talking with Heidi Leonard all about mortgages. Stay with us. We're back in just a few minutes.
This is 22 News in Focus with Patrick Berry.
Hello again, everyone, and welcome back to this edition of In Focus. I'm your host, Patrick Berry. Sitting across from me today, talking mortgages, is Heidi Leonard. She's with North Point Mortgage. She's one of their loan officers. Heidi, thank you again for joining me. I appreciate it. We've covered a lot of ground, a lot of fascinating information on how home buying has changed over the decades. What are some of the newer things out there that we haven't talked about that might be beneficial for home buyers, investment seekers, whatever it might be?
Sure. So there's some different mortgage programs that are out here now that have not been. And one of those would be called a debt service coverage ratio loan. That's for investors. It's for
Debt service coverage ratio loan.
Mhm.
Ooh, that's a
Yeah.
mouthful.
So DSCR, we'll abbreviate it. And those are for investors. And they do require usually 20 to 30% down. You have to have reserves, which would mean have so much of those mortgage payments in savings. But you don't need to use pay stubs, W-2s, tax returns, nothing. What we're going to use is the market rents of that property to qualify for the mortgage.
So if anyone's out there considering buying a multifamily,
Mhm.
that's the program to use.
If you're going to be an investor, it's only for investors, so you can't live in the property. But yes.
Oh,
Mhm.
okay. So look, use me for example. I
Mhm.
live in my home, but if I'm thinking of buying a 2-family, a 3-family, or multi-unit,
Mhm.
that's the way to go. So,
Yes.
and especially now, I mean, it's a double-edged sword.
Right.
Rents are so high
Mhm.
that you could certainly prove to a lender that you'll be able to repay that loan fairly quickly.
Yes. Yeah. So we do, we have the appraiser go out there and we confirm the market rents are there. So, and the property has to be in decent condition, of
Right.
course.
I don't know if this affects your world at all, but there's talk at the State House about rent control. That would, have to imagine, if that bill passes, that would affect that loan process, right?
Possibly. I don't know the specifics on what they're trying to pass, but I think it's more of the rent increase, if I remember reading it
Oh,
correctly,
you
but I
can't
could be wrong.
increase it
I could be
more than
wrong
a
though.
certain
Yeah.
percentage.
Every year. I think
You know
that's
what?
what
I
it
think you're
is.
right. Yeah,
Yeah.
because that makes more sense.
Mhm.
But we talked about it earlier. I mean, I look at what some of the rents are now. My 89-year-old mother-in-law lives with me because she could no longer afford
Mm.
the place she was living in.
Right.
But yeah, and I feel for those people in their 20s or 30s who are renting and
Mhm.
they're paying more for their rent than they would for a mortgage.
Right.
So how far in advance, if somebody's thinking they want to buy,
Mhm.
whatever it might be,
Mhm.
how far in advance should they contact you or you really start to investigate it? And what are some of the things that they should start getting in order
Sure.
so that they have the best possible rates and programs available?
Sure. I mean, honestly, as soon as they start thinking about it, contact me.
Okay.
What's the worst case we're going to say? You have to wait 6 months, you have to wait a year. At least you know. And if
Right.
there's any concerns, we can work on that. So they'd want to gather their pay stubs, their W-2s, their job history. We'd look at all that. If there's things that need to be worked on, and that sit down, we have a conversation about that so they can at least have a goal and start that process.
I have to imagine credit score is one of the most important.
Yes, we look at credit. Yes.
And that is credit score is determined based on all of the credit you have, credit cards, car payments, whatever it might be,
Mhm.
if you're paying them on time in full, right?
If you're paying them on time, yes. It doesn't necessarily, full, yes, I guess, or
Like a
some
car payment, you're
payments.
paying in full.
Yeah.
Your credit card, you might be paying at least the minimum.
Right. But making sure you're making those payments and not being late. Not to say that if you've had lates or had credit issues in the past that you can't get a mortgage. There is some mortgage programs that do allow for some credit blemishes.
So when somebody's thinking about buying a home, you say, as soon as that thought crosses your
Yes.
mind,
Mhm.
talk to someone like you
Right.
because you'll detail, hey, okay, you run somebody's credit score to figure out
Mhm.
where they are. And if it's 600, okay, how do we get you to 700?
Mhm.
Because a 600 to a 700 might be the difference between a 7.5% interest rate and a 6% interest rate.
Possibly. It depends on the program.
Right.
But that's where, yeah.
But that's how important your
Mhm.
credit score is.
Yes.
It will
is.
save you money down the road.
Absolutely. Yes.
What are some of the other things that you guide clients with as far as like getting their house in order, pardon the pun, getting
Mhm.
their finances in order
Sure.
to make sure that they have the best
Well, making sure that they have a good team with them, right? Because there's many steps when you're purchasing. You want to make sure you have the right real estate agent with you. You want to make sure you have an attorney that's doing real estate majority. There's a lot of different steps that you want to make sure the team's working together to get them to that end result of that closing.
So would you guide me to the right realtor, or is that not part of what you do?
I mean, there's contacts that we have, of course, and we can give a list of names and let partners that we've worked with in the past, of course.
So, and for where you're located here in Western Mass,
Mhm.
I know a lot of people here in 22 News
Mhm.
live in Connecticut. Can you help guide and advise people if
Yes.
they're looking to purchase in Connecticut too?
So I'm licensed in Connecticut. We have an office in West Springfield, and we have one in Rocky Hill as well.
Okay. What about second homes? Like, say I wanted to purchase a home, a vacation home in Florida,
Sure.
get away from New England for the winters, or a ski place up in New Hampshire. How difficult is that? And what are second home purchase criteria different or the same for primary home?
They ask for a little bit more down payment, usually 10. I think it's 10%. Depends on the unit, depends what kind of property you're purchasing. But it's not difficult. I mean, it is something that's attainable. Mortgage officers have different licenses, but our company is licensed in many, many states. So
Okay.
you can actually come to West Springfield and purchase a possible home in Florida or different areas, depending on the licensing of that loan officer.
And when someone's buying a home, they have to consider it's not just the mortgage. I mean,
Right.
there's something called escrow, which you put your taxes into, your insurance into. There's so many other things that
Yes.
go into, if you just jump online and say, okay, here's a home for $310,000, and you plug in, all right, I'm going to put 10% down for 30 years. Oh, I can afford that.
Right.
That's not everything, though.
Right. You got to look at your homeowner's insurance, and those rates have increased a little bit. And you want to make sure you're insured properly, and you have your real estate taxes, and then if you have the PMI as well. So those are things that will be
A
added to that
lot
payment.
that goes into it.
Yes.
Wow. Heidi, I can't thank you enough for joining me today. A fascinating conversation. We have covered a lot of ground. But folks, if you're interested in buying a home, make sure you get in touch with a loan officer to get everything in order and make sure you get the best deal out there, right?
Yeah, definitely.
Fantastic. Good seeing you. Thanks for coming in.
Thank you.
This is 22 News in Focus with Patrick Berry.